if your vision is to become a profitable trader or an investor, you need to pay very good attention to what I'm about to show you guys. All right, so in this video we're going to talk about how to trade Bitcoin or any other pairs, cryptocurrency or forex using wave theory. All right, if you want to become a consistent profitable trader, then pay attention to this. Now without further ado, let's dive into the chart. Please kindly subscribe to this channel and like this video, guys, as we dive into the chart properly. So what is wave theory? Many of you might be asking. Okay, I believe that the concept has been stated that every market moves in wave, guys. Okay, every market moves in wave, and this wave creates a peak and a trough, high and low as the wave continues, just like water. All right, and I believe it's from this concept that it's been driving that markets, you can buy low and you can sell high, you can buy low, you can sell high, you can buy low, you can sell high. Believe you me, it's not as easy as it sounds. All right, because most times traders find themselves doing exactly the opposite, because most times you might be seeing that this is low, but now another person might be seeing that to be his low, other person might be seeing that to be his own high. Just depends on who you are, on how you are looking at the market. All right, so but in today's concept, we're going to see how we can translate some of this into a formula on what we'll be using, because for you to really be a consistent profitable trader, you need to have an edge. You need to understand a particular concept that once this happens, then you are in a trade, and once this happens, you are out of the trade. And ability for you to identify this consistently over and over and time will give you an edge over the market. All right, so from that said, now the first rule we need to establish for you guys today is that for you to be a profitable trader or trade using wave theory, first thing you need to identify in the market is an impulse. All right, so the first thing you need to take a look of the market is an impulse. So before you buy or sell, first identify an impulse, and after that look for a correction, and once that correction is over, then you start looking for the next impulse. Now, how do you know that this correction is over? Most times you identify that the correction is over by drawing a trend, and once this trend is broken, then you'll be looking for the next impulse. Okay, so now you can see that we have an impulse, we have a correction, we have an impulse, and this from market structure concept is what a trend has been established. Whether this is going to be a correction on a bigger time frame or a continuation of a trend on its own, you wouldn't want to bother yourself at this time. But all you got to do is to make sure that you traded this. So if this is reversing downwards, it's none of your business, because already you're in a big profit. All right, so now if you take a look on this impulse, there are different varieties of impulse or different types of impulse. You can start with what? A 5-wave move up, like elliotwave established. It can be a very sharp move up. It can also be a kind of leading diagonal. Okay, so all these are different types of impulse. Now if you want to learn the or the details, the kind of in-depth analysis of all these impulse or the rules that govern them, you can kindly contact me using the details below. I'll be glad to help you out. All right, also on the corrective structure, we have once the market starts making an impulse, it gives us a, this is called we have a regular flat. We have a regular flat. We also have a running flat. We also have an expanding flat. Okay, and also have a triangle. We also have a triangle. So these are types of different corrections you will see in the market. All right, so as I said before, if you want to learn the details of all this, okay, and if you can't figure it out yourself, I'll be glad to help you out on this. Now having established these fundamentals, so all we'll be looking at for, first thing we'll be looking at for in any time frame that of interest to us is an impulse. Now remember, the second thing that you need to watch out for having established this is to know your time frame, because an impulse, a daily, okay, might be a 5-wave move in 1 hour, all right, or even in 4 hours. So identify the time frame you want to trade and stick to it, guys. Wait for that confirmation to be over on that time frame. So having identified your impulse in your time frame, then you wait for that correction to be over before taking the next impulse in the same time frame. Not when you see an impulse in the first time frame, you now rush to the lower time frame to take the next move, because that next move might be something like this, and it just come down to stop you out and you'll be wasting money just within those correction in the bigger time frame. So we don't want that to happen to you. All right, so having identified the first impulse on the bigger time frame, wait for this on the same time frame, then you trade this on the same time frame, guys. All right, so we'll be going to the practical chart now as I show you how to do this practically. Now remember, our first rule is to identify our first impulse. This is 4 hours on Bitcoin chart. All right, this is Bitcoin 4 hours chart. Now you can start with any, so let's just start with daily, so we have less noise. So if you take a look on daily chart here, we can see critically what the market has been giving us. All right, so now we see this is an impulse. This was an impulse. This is a correction. This is an impulse. So clear. Now, when many guys were saying that Bitcoin is dropping from here, you can see that Bitcoin gave us this 1, 2, 3. And if you go down to 4 hours, this corrective structure on Bitcoin is also an impulse, correction, and impulse. Okay, let's go down to 4 hours. As you can see clearly that the same correction on daily was an impulse on the 4 hours. Even go down to 1 hour, you can see that to be a very, very big impulse. See, it's an impulse, this is a correction, this is an impulse. So once you see a 3 move on any time frame, it's assumed that that correction is over, even though there are other complex correction that go beyond this, but we don't want to be talking about that now, because 80% of the time markets stick to the simple corrective structure. Okay, so we have an impulse, we have a correction, we have an impulse, this move is over. All right, so we'll be waiting for the same continuation to the positive side. Okay, you can see the same thing here. We also have what? An impulse, we have a correction. Now look at how this correction plays out. You see, we have impulse, it goes nowhere like this, it comes down, giving us a running flat, we have another impulse. So just like last time when we saw this happening, we're like, okay, this is a running flat, the market is going up again. Okay, so what can you see from the current scenario of Bitcoin? All right, I believe everybody can see clearly we have what? An impulse. An impulse is being shown. Now after an impulse, what next do you expect? We expect a correction, and after that, it's either this correction breaks this all-time high and drop, just like what happened here. It breaks this and drop, or it drops here. So, but the correction can be confusing, and that is why because the correction is always complex and it can be confusing, that's the reason why having a sense of direction or making a forecast is different from trading practically. So when you make a forecast on what the market is doing, that is one. Now trading that forecast is another. You can make a correct forecast and you trade it longly just because you do not understand the structures of the market. Okay, so what do we now do? We need to wait for a confirmation. Okay, wait for confirmation for that market to play out. So what we'll be waiting for now, if I go down to 1 hour now, we are waiting for this confirmation before we can dive into this market. Now, having established that this was an impulse in a bigger time frame, note that you can see now when you come to the small time frame, you see an impulse, a correction, an impulse, a correction, an impulse. That's a small time frame. All right, but now what you should be waiting for now, this is another impulse. We are waiting for this correction to play out. You can see we have an impulse, you have a correction, kind of a running flat. We're expecting one more impulse downwards. So when this impulse downward plays out, then we can now see that this move will be over. They will be expecting another move up, all right, or move down, as case might be, because a correction can be confusing. This correction, believe you me, can most times do like this, starts coming like this and break this low, comes up again and drop. All right, we've seen this many a times, and also it can from here reverse go up before dropping. So that's why you just need to jump on the Bitcoin. We trade this as it develops, guys. We trade as it develops. So if you can now predict Bitcoin using what we just learned today, if I should go down to 15 minutes, we can categorically state that, okay, Bitcoin is undergoing a correction, okay, and this correction is not over, guys, because it's still going nowhere. So we'll be expecting for the Bitcoin to break this low one more time, okay, before we now decide if it's completed, drawing your trend line, is breaking out, or it still continue downwards. All right, so that's how it is. All right, so on this scenario now, they can see that trading becomes easier when you have a sense of direction of where the market is going. All right, so the same thing applies to every other pairs. If I should take a look on Ethereum, you can see yesterday I told you that this is correcting, and that's why you don't need to. This is an impulse on a bigger time frame. This is a correction playing out. This correction might start reversing from here, making it an impulse, a correction, an impulse. Or this correction might also drop one more time and break out time, dropping again, making it what? An impulse, a correction, an impulse. So two scenarios we're expecting. That's why we don't jump into the trade. We also wait for the trade to complete before we jump into the trade. But looking at it from daily, having a bigger time frame on the whole structure, we can see that this is an impulse, this is a correction, this is an impulse. All right, so we're expecting this impulse to actually break out clearly on this, because Ethereum also just tagged the all-time high. It hasn't really broken out clearly, so we're expecting to break out clearly, then we can now start seeing this drop play out. All right, so that is how we are looking on the Ethereum within this legion, that is on daily and 4 hours. So but as I established, this concept works in every instrument. It works in every financial instrument that you can think of, whether forex, whether crypto, or stuff like that. I think I have one forex pair here. Let me open it for you. You can see this is an Euro USD. You can see the same thing applying: impulse, correction, impulse, correction, impulse, impulse, correction, impulse. The same thing applies. So we have another sharp impulse. We're waiting for this correction to one more drop before coming up again. All right, so you can see the same thing happening all over the market. All right, so that's why you just need to spend your time to learn about this, because it actually works. All right, guys, if you like this content and you want more of this, kindly subscribe to this channel and like this video. I will see you on the next video.